How is everyone doing? Price action has been so nice. It's unfortunate I've been missing all this price action. I'm just going to do a quick review of this price action and basically from the start of the month, as I told you, we had taken this previous yearly low from right here. We were supposed to go until the midpoint of the year, and reaching here, we've taken sell side. This previous weekly low. This was the 25th March. So once we take this, our next target is this previous monthly high. So basically, we are bullish. We we have intentions of going higher, based on what is happening around. Don't get surprised when we are in a market maker buy model and with our final destination as this 2024 high. Okay, this original consolidation. But what you can see is that we've kept on repricing higher and higher and higher. From the moment we came to discount of this range, immediately tapped this level and call it tap and fly. When it retraces it to this FVG, tap and fly, and then it flies immediately. When this candle came, the next candle flew. Now, what we can see is that today we opened with a new week opening gap. Opening gap is going to be so important going forward. This is the new week opening gap high. So we have this new week opening gap low right here. The low just in between with this previous yearly's cost quantum encroachment. So what we can see is that price action is literally to the upside. Price action is to the upside. When Trump announced that the deal between China, price went and took this high. I highlighted this one like 2 weeks ago that we will come and see price reach here. So before we see any retracement, significant retracement, I want to see price take out this high, and I want to see it fail to close above. If we fail to close above, we go and take out this high and close above, then we need to wait and see what price action will be because we may have a range this point before we explode. But if we just take this high and take this high and fail to close above, so meaning that we will see some lower prices. We'll see some lower prices coming up to this level where we will put in some kind of liquidity. Once we put in liquidity, we will take this liquidity, fill this. We may, if it is too bullish, we may not fill this gap, but if it is weak, we may fill this gap. Uh, go on and complete our market maker model. But for now, that's what we see. There's a possibility of price when price crosses above this level, because this is going to be a significant level. Every time you see a fair value gap and a swing high in a fair value gap is a significant level. You want to highlight such levels in your charts, okay? You want to highlight such levels. So in this case, we will take the wick of this candle. You can also take that low. And we take the wick and also the wick of this candle. So these are going to be so good points for referral. Now, what I want to highlight to you is, and I want to just give you something small. What happened today? Going on to the lower time frame, I was just reading price action. Yeah, things have improved in reading, and ICT tells us to tape read this price action. Now, today, going on to the New York session, I was going for an exam, but I decided to go on the charts and I see what I can tape read. Now, when I was on the charts at around lunchtime before actually market opened, I saw that price action had rallied up and we had put in this FVG, this one here, right here. This is going to be a very important level because this is where price action will decide. If price action is continuously bullish, don't want it to reach below the low of this C gap as taught by ICT. But if it is still bullish and weekly bullish and we see momentum decreasing, that's when we shall see deep retracements. But if it is strong and it's near the target, we will not see those deep retracements. brief retracements, and most times we will not even reach the midpoint of the gap. Okay? In most times, if we are so strong. So what happened is that price action took out this liquidity at a key level, and I immediately went to that. And I observed price. Every time you observe price, you have taken a lot of sell side. You cannot buy from this point. It is too expensive to buy. We saw that this candle came, and we look at this one. Look at it came. This is a bullish candle, bearish candle. We have a sharp turn, and this candle did what we call immediate rebalance. Immediate rebalance, as taught by ICT, is when a candle, a huge bearish candle, huge bullish candle, and then it falls below. Because we have sell side, this was a good point to sell from. You see immediate rebalance without taking liquidity. This indicated to me that we will see lower prices, but I was not concentrating. Now, going on to the 1 hour, I go to the 1 minute. Because we had reached our key level, I was able to go to the 1 minute. When you reach 1 minute, okay? The first trade idea came from this level where I told you after immediate rebalance. Immediate rebalance meant that we were going to see immediate price action like going down. I think immediate rebalance, the candle closed around here, around here, I think. We see this candle opens up and we see that this candle breaks below here and does not form. We always want to see this candle get a breakaway gap if we are bearish. Okay, before we take sell side, our sell side is this level here. This is the high of the fair value gap, our sell side. The only time we can get involved in this long is when we see a breakaway gap. And when we see a breakaway gap, we want to see price action retrace a bit and respect this gap. Highlight this gap. Gap is going to be so important if we are still bullish. A break above this gap means that price action has switched intentions. You see how the momentum with which price breaks above this gap, okay? And it uses it as a reference point. You see, even here, price action is literally reacting off this gap, okay? Despite the session almost closing. So this price action, because we had not taken sell side, I mean that we've not taken sell side is here. When you look at this chart, you want to look at your sell side. It is next to the fair value gap. And we can get involved in this short because we have not yet taken out that sell side. Because it is a bullish day, we expect prices to go lower before they go higher. A bullish week. So this is how you tape read. You look for the next fair value gap. This is a good sign when you see this bullish candle. Once this candle opens, you do not want to see this candle close above this fair value gap. Okay? You want to see this candle remain. ICT tells us that when you see the candle remain below the consequent encroachment of this gap, you don't want it to close above. But it can feel it, but it would be nice if it just reached below here. It would show you strong momentum to the downside. When this happens, up and reject, you can sell and go short at this candle. Okay? And your stop loss can be just below. You want to observe this week, above this week. Price action will not go above this week if it is bearish. Till the intentions of price is reached. You see how, and this is the long hanging fruit, but this is our first trick at profit level. And for this level, cost is actually safe here. Now, ICT tells us to go down to the 30-second chart. So I went down to the 30-second chart and I caught this trade live. I was step reading it, I shared it in my group. But you know what? I have taken sell side. When we take sell side, you should never buy because it is too cheap. Buy. No, you should never sell when you've taken sell side. If you sell here, it is too cheap. You'll be buying. That's why I was able to go down the 15 seconds chart. The same price action we see here is also the same price action on the 15 seconds chart. 15 seconds chart. offers you a lot things you can read with price action. You can transfer these a higher time frame chart. Okay? Now, if you were to come to a 15 seconds chart to notice, you're gonna notice things that ICT talks about. Once we have taken sell side, always we've taken sell side here. We want you to always mark out the first this fair value gap that takes the sell side and mark it as inversion after sell side. You are reading the story. Anytime we close above this inversion, we want to buy. Our step reading was here. I saw we took sell side, we closed above. Hmm? You know, our step reading candle by candle. This is what I was watching. Okay, you have to know these things. Now you see this where your take profit is because of this fair value gap. So we are seeing this candle print, this candle print. We are watching candle. This candle comes and rejects the fair value gap. Immediate rebalance. This candle breaks above. We are still watching. Now we're watching how each candle on this week prints. We're watching this week. You can see this week. This is it. What we call anticipating what pattern recognition. We are improving our pattern recognition because what we want to see. I told you how a pattern for market is about to change. So we have to take sell side, put in a low, take out that low, invert a fair value gap, use it as support to go higher. This is what we want to read the charts. On the 30 seconds chart, once this candle closes and rejects, this is where you go back. So you see this candle here, a bullish candle with immediate rebalance and close below. You sell short here. Why do you sell short here? Because we have sell side takeout and we are from a key level, and sell and be confident that our stop loss, as this candle closes, is safe around here, and we will reach the buy side before we take out our stop loss. Now you can get so many trades. When I start doing live streams, we will see, be able to tape read all these things. So at this candle, we are tape reading this candle. We have this week. Week comes, this candle breaks above that week. Now we are watching whether this week we don't want it to reach false credit encroachment, or we don't want this C. The next candle we want it to close above that week. So what I'm talking about. Let me change the color. We are watching this week the candles interaction of transaction of these candles. I'm watching this week. We do not want, when we draw, we want this candle, the next candle, when this one closes, we don't want it to fill this week. If it fails this week, it means the price action is still weak. It's not ready to go up. So you wait. But if it does not, it means it is ready. We are ready to explode. So you see how the next candle comes. Now, as we are watching that week, now our attention is drawn to this fair value gap. Okay. First intention that price action is bullish is we want to see every candle that touches this price action. How does it behave? The candle that touches this fair value gap. Okay. I call it tap and fly. You will see. We want to see every interaction we are observing because we are anticipating at least a retracement because we have taken out sell side. See this candle here closes. This candle and close, but we didn't close above this week. So that's why we're watching this week whether it can support price. Now you see this candle, it taps and immediately rejects and closes above the opening price of this bearish candle here. Now this is when I called for longs. We were going to long. We're going to long from this point, and our take profit is, I think I put this high. Next time, you know what I've learned. You put target the low of this fair value gap. was our take profit. I told them that the stop loss belonging at the closure of this candle here. If I was on the charts trading, I would have in my position here. And TP1, this is TP1, this is TP2. One is a TP, like you can partial but slow yield. I told them the stop loss would come just below this inversion to increase our risk reward. So this was our, actually I think I put the stop loss right here for the first trade. And because the risk was low, I was like, I put let's TP or TP most of the things up here. TP, and if it comes back, you take another trade. This was a 3 hour. The final TP was here. So we come, we do not take sell side, but we are reversing. You should never get involved in such a trade because we've not taken any key liquidity level, but we are reversing. We are still tapping and rejecting, but we fail to go higher. Now we are taking out the early buyers. Once we take out, we tap here, tap and reject. I want to tell you, wait for the candle which taps the key level and rejects. Now we put in this fair value gap here. When the time is right, it's coming to 950. See this candle? It's now 950. Immediately we see this candle come, tap this fair inversion and reject. When you go full margin, you ever see this kind of price action? Go full margin to the next liquidity level, and you know that, you know what? Price action is not returning to this kind of level. This is how you get your 3 hour. Now, because I told you how price action behaves in a fair value gap. Price action, it puts in a low. This is the first step of the fair value gap, puts in a high, which it will take out later before it can go lower again. So we are coming to take out this high to go lower. See what happened. Now you see we failed to take, but we put in another relative equal highs. Now, step reading price action is that when we reach this key level, we want to watch the first candle and the second candle. Once these two candles close, they are enough to give us a story. You see this candle here. Its closure, it shows that price action is going until this liquidity. We've engineered liquidity. Because we have liquidity, that's when we can only get involved. If this does this and reaches here, we don't get involved. We can confidently hold this trade and sell shorts. Okay? You can hold shorts on the 30 minutes time frame here. So this is like high frequency algorithmic trading. I'm still shop reading. Once we take liquidity and we have taken liquidity, you don't want to get involved in this choppy price action now. Even time will guide you. This is 10-10 macro. It's not so clean. You see, we've tapped the key level of a fair value gap. If we put in a market structure shift, we are always sure that we'll reach the upper level liquidity. We can buy. Now here we cannot buy because we've not. We can always sell here. Now coming here, at what happened? We are almost the midpoint of the gap. Now same price action again. This is the upper quadrant. Put in a low here. We're watching these candles. Put in a low and we break above. What do you think this is happening? We are watching the week now, like I told you. We watch that this week, the upper half, we want price action to stay in the upper half of this week. If the candles are staying in the upper half of this week, we are watching, they come and fail to close above any break, any inversion. It full magic. But as I always told you, mark this fair value gap that takes out liquidity. In this case, once we close above here, we are good to go. So you see another trade. Now this is what we call buy and hold because we were in a bullish market, and we know that in order to go bullish, we need to go lower in order to go higher. So this is a trade you were able to hold. but it dropped because the London session moved so well. That's why the session closed here. Same story. That's enough for today. You have to tape read this past action. For more, go to ICT YouTube channel and watch the 2024 mentorship. This thing, nice guys. This is gonna be our life. We're building this shit brick by brick. This is clean. Trust me, guys, this is clean. Now, sticking to 1 minute time frame, same price action can happen on the 1 minute time frame. But on the 30 minutes, you will see a lot of action. See this? On the time, what I teach you is on the reversal signature. On the 1 minute, we would have missed this because on the 1 minute, we always want to see this breaker. We would have bought here, we would have missed this sell, and we would have almost missed this. Maybe we had the same thing here, same price action. But I'm getting in love with the 30 seconds chart, trust me. Can't wait to apply what I'm learning. Anytime we break above this, I told you these highs in the fair value gap are so important. Break above here means we are bullish. Same thing here. We look at this liquidity. Fair value gap here. X liquidity is so important that you can't break below this gap. As you see, it supports price. You always label it version after sell side. The first fair value gap takes out sell side or after buy side. It is so important that it can give you directional bias. Okay. And mostly we are acting from a key level. So you see how you could buy and hold. Same thing I told you here. Like, go back and rewind this video. I told you how this price action is so important. And buy here and take it to this liquidity level. Price action starts to retrace after taking out a significant level of liquidity. That is so important. Thank you for listening, and yeah, more will be coming soon.